A lot of times this is the layer when people walk away. Maybe this isn't right for me, or I'm not going to do this. So now here's the problem, here's what it would take for that problem to occur, and you can decide, is that likely or is that very unlikely? If it's likely or even probable, you shouldn't be doing the deal. If it's very unlikely and not probable, what would make it probable? List out those things. Now you know what to be looking for, and then you also know how to plan. As you do this, you're going to start to take these big concerns, drop in occupancy, drop in rents, increased expenses, and you're going to start to whittle those down to something that is, no, here's the actual risk associated, which is largely a lot less than people think. Focus on managing what you don't know, not trying to find just endless more information to confirm your belief. Control those downsides, measure the upsides. And as you go through this process, then you'll feel way more comfortable, you'll understand those risks, and it won't be nearly as an emotional thing. Welcome everybody to Self-Storage Income. And today we have a very difficult topic, I'm not gonna lie. This is a little different than our standard self-storage income, underwriting, acquisitions, market analysis, valuations. It's equally important. It really is. In fact, it has to do with all of that information. We get stuck in analysis paralysis, right? So there is this point where we are holding ourselves back. It is not due to a lack of information. It's not due to a lack of resources, even though you may perceive that. It's not true. It is simply us holding ourselves back. Like we can't seem to just move. We can't seem to get going. And then we find ourselves sitting there like, why can't I find deals? Mm-hmm. Why are other people being successful and I'm not? And you may already be successful, meaning that you're not moving, you're not progressing. There's a lot of times in life that I feel that way, even though I've already had success. And then there's a lot of times when you're starting out, which I've been in years, that it's like, I feel like I'm smart enough. Like I see people that are successful and I'm like, I'm not an idiot.
Yeah, you see everybody else out there doing it and like quote unquote doing it, right? And like you feel stagnant, like you're not moving forward, like there's something that they know that you don't, or that they see that you don't, and you're like, how? What is it?
Yeah, what is it?
Yeah.
And this is a ongoing thing, I think, for a lot of people. It's driven off obviously some real core issues that are universal. And they talk about like, oh, your first deal is the hardest. Your first everything, your first acquisition, your first syndication, it's always the hardest. The reason being, though, is not so much actually that it was that difficult. It was that it was for you.
Yeah, it's new. It's
new.
New territory.
You don't know, and all these things, you actually end up holding yourself back. And I know that a lot of times we look back and it's like, why was that so difficult for me? Why was I so scared? Why was I so, right? And that's if you break through. Lots of people, though, they never break through that. They just can't. It's too hard. They don't even go ask for that job. They don't even go try to do that thing, right? Even though they actually want to. And a lot of people are like, oh, it's just fear. It's not. That is a vastly oversimplification. That you're just scared, right? And I don't believe that. I don't believe that's true. It's not that simple. But today, especially, I think that's a big problem for people. We see the markets. People are stalled. They're stagnant. Mm-hmm. There's uncertainty. And a lot of people we talk to, they say, maybe it's not the right time. Mm-hmm. And they're looking for answers to give them the reasons or confirmation that they should go buy that one thing, do that exact thing. Mm-hmm. And until they get that, they're not moving, only to find out that they're never going to get that.
As you're talking about this is on topic of what we're talking about, but it's slightly different in the aspect of, a lot of times we don't blink when we go out and we sign the dotted line to buy that new car, to buy the house, to go to college, to do these things. And we're talking, $50,000, $100,000, big numbers, right? But when it comes to investing, buying businesses, when it comes to these other aspects, there is that fear. There is that like unknown piece. There is all these things, and we're so hesitant a lot of times to do it. And it also touches on that you're personally guaranteeing a lot of this stuff as well.
Yeah.
Especially when you're beginning, right? And
Yeah.
so
it's not that there's no risk.
exactly
There is risk.
There's risk.
That's not it. Of course there's risk, right? The risk is real. That's a real thing, right?
Yes. Got to protect the downside.
Risk is real. Pain is real.
Yeah.
Lost time is real. All of those things are real. But I think the vast majority of the time, 90+%, those aren't actually what's stopping people.
Mm-hmm.
Because like you said, the risk too, though, of buying a house and a car accident, on and on and on, that's all real risk.
Mm-hmm.
In fact,
But it's just accepted. Like you
it's
just do it.
accepted.
Yeah.
It's
normal.
Exactly. We accept it. We understand it. Now, there's two parts to this. There's the actual knowledge of the process of doing the execution. So if you're doing something, there are things you have to know how to do, right? Like that's how it works. If you don't know, you have to learn, and then you learn and you go through it. So there is a part of stagnation, I'll call it, that may be healthy. That's not actually stalling. You're moving forward even though you don't feel like you are. We're talking about the layer after. A lot of times this is the layer when people walk away. Maybe this isn't right for me, or I'm not going to do this, which is being defeated. And I see that, but I also know that from experience. And there's so much analysis paralysis, they don't get the signal, which is really meaning somebody doesn't tell them exactly. They don't get rid of all the risks. They don't have a perfect knowledge. They don't have this is it, this will work, and there's everything exactly what you need to do. And because they don't get that, it's not for me.
Or
right?
they even feel like they don't have that.
Yes. Exactly.
Yeah.
And I think that when on this podcast, we talk a lot on the execution part. All right, you want to raise money. Here's the 4 parts of doing a deal, right? There's 4 different segments. Here, how raising capital works. Here's what's happening in the market. Here's how debt works. Here's the resources you need. We don't spend hardly any time talking about internal overcoming things like self-doubt, all that kind of stuff, right? It's always more, we try to be just like, here's the tools.
Yeah, very tactical. It's like the how-to and not as much of like the mindset and the different things going in. Like there's a lot to
here's
it.
what it is. Here's the numbers. Here's what we're saying, which we like that. We like that because we have the data, we have the knowledge, and we're actually doing. So that's easy for us because we come into the podcast and we're literally doing the thing, and so we can talk about it. But also I realize that that isn't all of it. And there is, for a lot of people that are starting out, this part of self-doubt, uncertainty that we need to address. And so I want to kind of touch on, first of all, recognizing that it is a thing. It's real for everybody. And it does need to be addressed. And it isn't just simply, I'm scared, okay? And so I think first is how we quantify risk. This is wildly skewed, I believe. Risk, for some reason, I think there's actual reasons that are fundamental to us being humans. The risk of danger is so vastly outweighed in our minds and our feelings than the risk of upside. Because the risk of danger was you got killed.
Yeah.
And the upside was you got berries. It's not a very good, right? But in our modern world, that's not how risk works, right? But it doesn't mean those feelings aren't the same. The feeling of being embarrassed and then being ostracized from the group means that you don't have resources and you and your family or you are going to die out in the wilderness. So you do not want to go against norms and things because our bodies are telling us you're going to die. So there's, first of all, those things are real. But what that means is that we have to have a methodology of actually analyzing risks for ourselves so that we understand. And I think that is out of the gate one of the most important things you can do because it's not gambling. People view investing as gambling. Put it all black. Okay, I'm going to buy this property and roll the dice and I hope this works. That is not investing. That's gambling. That's not what we do. That's not what we teach. we're in Mississippi right now, and we're turning this storage facility around. Now, lots of people are out trying to buy facilities, small ones that range everywhere from $300,000 to $4 or $5 million. Now, they're worried about getting the money or having the financing. This is why we team up with Live Oak Bank, because they get this. They understand storage. In fact, we have them help us underwrite deals for our students and others, because they are one of the best people in the industry when it comes to getting loans, especially small business loans. They can actually help the customers when they find the asset, understanding how much debt can I get? What's it going to look like? Not just because of the customer they're working with, but because of their knowledge base. That changes them from being a bank to being a real asset to the customer. We recommend Live Oak Bank to our students as well as others that are trying to get into the storage business. They have an in-depth knowledge of this asset class, so it's more than a bank. It's more than simply getting money. They're actually an asset and a partner to them, helping them go through all the things that they don't know and understand. First of all, if you know the risks and you outline them, okay, let's talk about it. Bankruptcy, lose my house, lose my family, lose my wife, my kids, all these things these are the end atomic bomb scenarios. Start off there and then move forward. There's all sorts of things of lost time, the embarrassment. And two, I'm not saying these aren't real, and I'm not even saying these aren't risks. Those are actual risks, meaning, yeah, sure, these things could happen. Mm-hmm. Now, when we look at this as you go up, lost time, lost effort, I won't succeed, on and on and on. There's all of those internal, external things, and you just literally pile them up and write them down. Write them down. As you get through those, though, we run into much more tactical type risk analysis. How much am I leveraged? How much money can the asset make? What happens if the revenue drops, occupancy drops, rents drop? What happens if taxes go up more than I can pay? What happens if there's all of these actual tactical risks? Now, there's a line that you need to delineate between the two, and the reason being is very important. The actual risks that come on execution or doing the thing leads to the fear of the other risks, embarrassment, loss of family, right? Financial ruin, right? That's the jump that is made. And it's not a jump because those are, I'm doing it, here's risk, and here's outcomes of those risks not happening. The point being, though, is once we get into those tactical type risks or outcomes that are negative, those are manageable. So we can manage that type of risk. The other risks that we talk about, like everyone's going to hate me, right? Mm-hmm. I'm going to be so embarrassed. I'm quitting my job. I'm never going to get a job again, right? All those aren't those types of risk that we perceive are outcomes from certain things that are happening. So they're not you don't manage those because those are outcomes. Delineating those two things is really, really important.
Well, it goes back to like controllables and non-controllables.
Yeah, exactly.
Right? Like you can control a lot of those tactical aspects, what you're doing. You can identify, we're talking storage, buying businesses, right? You're talking, you can look at your expenses, your income. You can look at all of these tactical things and make decisions based on data. Whereas you can't really, you can't make decisions based on the emotional pieces. Obviously, they're going to have some level of impact on your decision making, but you have to focus on those controllables.
Yes. When you do, though, it changes the risk analysis. So what you do is you go, okay, what are the risks? The risks are that occupancy is going to drop. What is going to cause occupancy to drop? Mm-hmm. Well, it's going to be two things. Demand is going to go down or supply is going to go up, which in turn has demand go down. So there's not as many people that want the product or there's too much product. Okay, well, let's look at the market. Is there any change in supply? All right, we have no change in supply. Okay, well, half of that risk is now gone based upon what we can measure. So we know the demand's here, everything. Mm-hmm. So that supply is not changing. Okay, great. We're not worried about that. Now let's look at the other side. Demand is going to go down. Well, what would cause that to happen? What would be the actual drivers? All right, the housing market slows down, which we saw in the last 2 years. That actually had less people were moving, and so they needed less storage. Well, it's great because now we can actually see that play out. So we actually know that. We've seen demand go down, and you can see the numbers. We can read it. So you can actually look in the past and go, okay, over the last 20 years in this market, what is occupancy? What has rates done? And in the short term, when they've gone down, what caused those things? And then you can look at that individual site. And then you can say, how many people are here versus how many people need storage? Is there more demand today than there is supply? So even if demand came down, we'd still have it. Now, how much would demand have to go down for me to get into a problem? So then, okay, demand goes down, occupancy goes down. Occupancy can go down by 20% before I'm like, hey, we might have problems. All right. What would it take for occupancy to go down by 20%? If it went down by 20%, what would that mean? All right, now that means that we have a cash problem. Okay, can you have cash reserves? Yes. Or could you fund? How much of it could you fund, right? So now here's the problem. Here's what it would take for that problem to occur. And you can decide, is that likely or is that very unlikely? Okay. If it's likely or even probable, you shouldn't be doing the deal, right? Now, if it's very unlikely and not probable, what would make it probable? So what are the things? List out those things. Now you know what to be looking for. And then you also know how to plan, right? We may need cash reserves. Or maybe in order to build those cash reserves, we should do no interest payments for the first 3 years, build up cash reserves. You could be conservative to the level that you want to be to protect against that downside. Now, you may say, okay, rates and on and on and on, right? Taxes. Well, go to the county. When do taxes go up? How do they go up? All right, well, what's the risk of that? So if I have expenses, what are my main expenses? We got taxes, we've got insurance, okay, then how do those things work? How's the county adjust? What could I expect? What are the realms, right, of actually, achieving a certain whatnot? As you do this, you're going to start to take these big concerns, drop in occupancy, drop in rents, increased expenses, and you're going to start to whittle those down to something that is, no, here's the actual risk associated with that, which is largely a lot less than people think, unless they're making bad decisions because they already got the things that they shouldn't be doing. So as you limit that down, then you can protect against it. And you can know if this is a possibility, what would happen. The idea is not getting rid of risk, it's managing it. But when you do that, that changes now your outlook because you go, the odds of this happening are this, and I actually know what to do if this starts to happen. So I can then, if that occurs, I can now limit that outcome that I'm trying to avoid because even though I've managed risk, they still happen. Okay, does that just mean I lose everything? Well, no. Okay, well then what does that mean? Well, there's all these steps that have to go before that. As you do that, you start to gain control of that internal self-doubt because what you're doing is you're giving yourself control over it. And you're doing it in a way that you're not lying. And by that, I mean, there's a lot of people, I am very against blind optimism. I'm very against that, where it's just like, if you just believe in yourself, no, the reason I'm against that is because that's a lie. Like, just because you believe something doesn't mean it'll happen. That's not how it works. If you believe in something, you will do the things that will make you be able to do it, okay? So instead, figure out those things and go through a process and achieve them. But I think a lot of people take this blind opportunistic view where it's like, you know what I'm doing is I'm ignoring the risk. And so this equation that our brain has, like that lizard brain, death or berries, okay? What I'm doing is I'm saying I'm going to ignore because death is probably not likely and it's probably not nearly as bad. So I'm just going to ignore that and I'm going to be optimistic. So I'm putting more weight on the optimism than I am on the negative. For me, I'm like, why do that at all? Why don't you just take both things as they are?
And
as they are.
More emphasis on the negative.
And control it. Focus on it. Dive into it. Understand it. Accept it. And then you're going to be okay with it. What you'll find is instead of analysis paralysis, if I know more, right, then I'll either find an answer or it won't happen. Focus on managing what you don't know. Not trying to find just endless more information. to confirm your belief. Control those downsides, measure the upsides. And as you go through this process, then you'll feel way more comfortable. You'll understand those risks, and it won't be nearly as an emotional thing.
Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description.
Now, how do you decide, though, to buy or move forward? You do that before you get to the table. And you may go, okay, AJ, how do I decide to buy if I don't even know what I'm doing? That doesn't make sense. Like, I don't have an asset, so how should I know if I should buy it?
Right.
I know what we're buying before that asset ever shows up on our desk. I know what kind of return we need. I know what the ratio is. I know what the market size needs to be. I know what a facility, as far as CapEx, needs to look like. I know if we're using a expansion strategy, what we need. I know how much risk in the market from occupancy, right, or new supply is too much. I already know those things. So when those things come across the desk, the team's just like, nope, not buying it.
Yep.
And then when it comes across the desk where we're like, hey, this is it, then we go into underwriting, and then we get on a contract and go under due diligence only to confirm.
Yeah, risk mitigation.
Risk mitigation and confirming what we know and believe. The point being is we've made the decision to buy. Now we're looking for the thing that we're trying to buy. So then when it comes, it's not about me loving the asset. It's not about me believing in myself. No, it's we know what we're doing. Here's the process. Here's the execution to get to the goal. You shouldn't love a property. You need to believe in it. You need to be optimistic to create a process that you will find that deal that you can manage those risks and will give you the upside that's worth it. That optimism leads you to keep looking and underwriting deals. As you do that, you'll learn more.
Exactly.
And then as you're learning more, you'll say, oh, I can measure this, or there was upside that I didn't even know I could get. And so you'll actually get better. And then as you do that, you can manage risks better and see upside better. The next thing you do is you don't need to know everything. So first of all, we have know what you're buying before you even go try. Understand that risks are always there, they're inherent, so all you're doing is managing them. We want to discover those risks. We're trying to find them so we can manage them. It's not about ignoring anything else. Then when we move on from there, the next thing you realize is that you don't need to know everything. So this analysis paralysis, because I'm not an attorney. I'm not all of these things, and I don't need to be successful. Me being successful doesn't mean that I'm an expert in everything. In fact, it's the opposite of that. I require and I need people that are much better at a lot of things than I am. If I had to be the best, if I had to be just super intelligent, then I could never be successful. And it's egotistical to think that that's how it works, because that's not how it works. But when you put that kind of pressure, what will happen is your brain, that little voice that you call, negativity, and ignore it, which is really just the truth, saying, you're not an attorney.
Yeah, you can't do everything.
You can't do everything. Instead of saying, shut up, yes, I can, you say, yeah, you're right. So then what I do is I figure out what are the things that I don't really know or I'm not good at. You know what? I believe that I've underwritten this well. I don't know for sure, so I'm going to go get a feasibility. I'm going to go with people that are experts that have done this, because I never have, so I don't know what I don't know. And I'm going to get them to give me the information, confirm my numbers, look at the upside, help me manage the risk on the downside. I'm going to have attorneys look at properties, figure those out. I'm going to work with the banks, who they're going to underwrite it. We're all going to look at this. I'm going to have a whole team. What am I missing here? What are the downsides? What are the risks? here is my box. Here's my target that I want to buy, that I want to own. Does this meet my criteria? Then I'm getting confirmation from people that know things that I don't. So now I've taken away that fear and that risk of, I don't know what I don't know. Because that's what everybody's going to say. Yeah, but I don't know what I don't know. Yeah, welcome to life. I don't of course.
Exactly.
I know a lot more than when I started. Like way more. And you're like, well, maybe AJ, if I knew as much as you, I'd do it. But what I don't know is infinite. And I need more people today than I did when I started, because there's more that I don't know, because I'm doing more.
And you're in a totally different place. It's not like you're still back in that same place you were and can just make decisions and succeed in that spot. You're at this new place, uncharted territory. I mean, we're still figuring it out each and every day.
Markets change every day.
Where to go. Exactly.
It's always changing. So this idea that you have to know, and if I just gain more knowledge, I'll be able to move, and then I'll break through. And then when you finally figure out that you can't gain enough and there's no certainty and there's no one to tell you to exactly do it, you just give up and go away. First of all, that will never be true with any investment strategy or asset or business or anything. And it's not even true in life. You don't know if you get married, if it's going to work out. You don't know if you have children, if they're going to be healthy or not. You don't know when you drive to work if someone's going to hit you. These acceptable risks in life that we don't even bat an eye at to make massive life-changing decisions
every day,
we will take an investment in something or time or work that needs to be placed in it and not do it because the risk is too much, even though our normal life has risks that is vastly greater. And you go, oh, hold on here, including things that don't even have upside. I'm going to buy this nice new car. I don't know if I can pay for it. We're going to try, but if things go wrong, I'm going to lose the car, and then I'm going to get my credit score. What's the upside in that? You have a nice car. That's it, right? So that's when I'm looking at this saying our risk analysis can be skewed because we confuse familiarity with risk. That is not true. Also, amount is not risk. What I mean by that is if I invest $100,000 versus $1 million, which is more risky? People are like, oh, $1 million. That's not true. You have more to lose, but it doesn't mean that that investment is more risky. You can invest in an asset for $1 million that is by far safer than one for 100,000. So just because amount doesn't change risk. If that was true, big money managers would take on way more risk, like astronomical more risk, obviously, than a single person investing in a single local market. Not only is that true, it's backwards because you're way more concentrated. Understanding risk is a fundamental part, but then also understanding how we interface it, our emotions driving with it. So instead of making it an emotional thing, break it all down. Get your target, find the risk, say this risk equals what outcome that drives that emotion, manage the risk, and show how the worst case scenario, what is the worst case scenario? Am I okay with that? And what would that mean? And then you can move forward. You can create a path. And you're like, well, what if I'm wrong? Well, that's why you have other people. So you break through, I think, analysis paralysis, being stuck, being in a standstill, not by a mental fortitude of believing or not being scared, but being prepared and taking actions and steps to understand risk and to mitigate unknown, unforeseen events that allows you to be more comfortable, which then changes your internal perspective of risk, which then makes you braver, right? But that mindset alone gives you permission to not only be negative or afraid, it's okay. You should be. If you are taking people's money and you are not scared you're going to lose their money, you should not be taking their money. I don't want to give money. Somebody that's like, oh, there's no risk and no, there's a sure thing. I'm not giving you my money.
Oh, definitely.
Are you kidding me?
Yeah, guarantees, red flags.
No, that's not how it works. I know that is. So what that means to me is you haven't looked at the risks and you're not managing them. Instead, you are blindly optimistic and you're choosing belief. That's not how you invest. That's how you gamble. There is a difference between how much you know and what you know. It is not, you're not better because of how much you know. You're better because what you know, as in the important things. When we get started, I don't need to know everything, but I need to know the important things.
Mm-hmm.
So there's actually a small group of things that if I'm starting a business or investing that I'm like, I have to know. And if I don't, I'm not going to move forward. I don't need to know everything. That's not important. And so when you're looking, you may say, what, first of all, for you, what is the most important things to know about success? And I talk about this in storage a lot. Demand, 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 demand. If you're in a market that has high demand, you can be stupid and be successful, right? So right there, you have a few metrics that actually take care of most of your problems, right?
Mm-hmm.
And then you have like event triggers, refinance, mandatory refinance, contracts that cause an event to occur that you may not know if you can finance or the outcome. So you have big unknowns. How do you mitigate those things? So you don't, all of a sudden you're starting to erase big unknown things that if it's the timing's wrong. So floating interest rates, all of a sudden you don't know. So you have more risk because you're not managing the risk of the interest rate. That's what fixed interest rates do. It just manages the odds of expenses being a certain level and the property to pay for the debt and the property being able to afford it. Even if the property is fluctuating in occupancy, I now know. Here's my cost. I can go up and down this much until it becomes a problem. So when you look at that, saying the main things that are important for this to be successful are these things. That becomes my buy box, and that becomes me. Then I go and I look for all the risks to mitigate it and manage it. From there, I can find experts to help me with everything else, right? I can find the guy. I don't know anything about building, repairing. I don't know anything about CapEx. We can go find somebody that can do that. They can go to the site and actually audit. Tell me if the roofs are good. Tell me on and on and on.
Mm-hmm.
I can't do that. I don't know. That's not in my top priority of things to do because I don't even need to know it. If it meets my buy box and everything, I go hire somebody. If they come back and say, no, this is all shot, then I say, okay, we're not buying it. It's that simple, right?
Mm-hmm.
I don't need to know that before I make a decision or before I move forward. Now, I need to be able to get out in due diligence if I had a confirmation. So what am I doing? I'm managing the risk.
Yep.
I'm not saying I need to know. You need to be able to walk forward in the unknown. You need to be able to look at the downside, analyze it. You need to understand you're not alone, and you need to make the buying decision before you ever are faced with an opportunity.
Oh, that's so true. And this is one of the reasons why, in our inner circle and communities, why step one, day one, we have you build that buy box.
Buy box.
What exactly is the buy box for you? So you can then make that decision from day one, moving forward, what you need to look at or what you want to look at, what is going to fit with your goals, your objectives as far as investing and storage. And on top of that, the other thing that comes to mind as you're talking about this, AJ, is that confidence comes from doing.
Yes.
Build that buy box.
Yes.
And go out there, make the phone calls, get the deals under contract, underwrite them, just go through the motions of doing.
Confidence, knowledge,
that's going to
experience.
Yes.
No,
it's then going to really help streamline and help you understand what that buy box is. Do you need to adjust things a little bit? Because you might have not even been correct. Honestly, you probably aren't going to be correct your first go round, right? Yeah. So get out there and actually do it. Build the confidence from doing. Refine that buy box. Understand what you're looking at. And again, the more you do it, the more you're going to understand and be able to just look at these things, gather the bits and pieces of knowledge like you're talking about that you need to know to be able to make a data-driven decision that's non-emotional, that's based in logic, that's based in fact, and be able to actually execute as opposed to being like, I don't know. You're going to have to pick up, you kind of had a good analogy, I think yesterday we were talking and you're talking about having that lantern. And It's like you can't see everything in front of you, right? You're going through the fog, but you can see the next two steps, right?
Yeah.
So just take those two steps.
Exactly. So if you can see 6 feet in front of you, in order to see 12 feet, walk 6 feet.
Yes, exactly right.
And you're so right. Analysis paralysis, too, is a problem because knowledge doesn't create opportunities. Doing does.
Mm-hmm. Yeah.
You learning allows you, while you're doing, to better maybe identify everything else. That's why we're obviously big education. We do this, everything else. But it's not going to help you unless you actually go underwrite, unless you go find it. Opportunities aren't given. They are not even found, they're created. If you are not creating, you cannot have an opportunity. And so I think that when we look right now where everything's at, there's a lot of noise. A lot of noise in the market, in the world.
It's wild right now.
It's crazy. But yet there's not a lot of signals, or the signals that there are getting mixed. It's not about how much you know, it's about what you know. So right now in all the noise, most of it, 90% of it, literally doesn't matter to whatever you're trying to do. It's irrelevant. Yet that noise for most people is actually what's making buying decisions, what's making them decide if they're going to move forward or not, even though it has nothing to do with the outcome, yet they don't understand how it does.
Yeah.
Lots of times they believe it does, and they're wildly wrong. In fact, a lot of people, what they believe is actually opposite. Oh, COVID is going to make real estate prices crater. We're going to have a real estate recession. Then all of a sudden, real estate prices doubled.
Mm-hmm.
Why? Because the signal was free money from the Fed, right? So even if the assumption that we look at and we go, that's a real possibility, it doesn't even mean that it's going to happen. That's why when we look at real estate, local markets, local areas, what is the actual risk associated with that property? Because I can manage it. What is the supply and demand of that property? I mean, are we really going to be affected? Are outside things that are not correlated with that going to affect it? And you may say, well, maybe, but do you know that? And if you don't, or if you do, can you manage it? And if you can't manage it, like what? Why is that going into the equation? And I think this is why people miss all the opportunities. What they're looking for is a confirmation that it's going to be good. The problem is when you get a confirmation that it's good, it's because the markets are delivering confirmations. Here's the thing. You get, oh, it's good, it's good, it's good. Then you buy, but the reason it was good is already passed, and now you're on the downside of the market. So all of a sudden you're buying high, selling low. Because the negative confirmation, it's getting bad, it's getting bad, it's getting bad, means it's bad, I'm not going to buy. Even though that was actually the signal to buy.
Yep, exactly.
And then that's what made it good. The confirmation that is needed by external things means that you don't know what you're trying to buy. It means you don't have a buy box. You're waiting for outside circumstances to tell you to do it and that it'll be okay. And then when you do it, you're often much, much too late.
Well, and what you're talking about a lot is too that just emotional aspect where again, whether it's you're watching the news and listening to the talking heads and all these big, crazy, scary things going on or whatever that is, that's triggering that again lizard brain, like you said, that emotional response of just negativity, like, oh, I can't do this now because let's say like for today's example, tariffs. Tariffs are going to cause this, and this, and that, and like honestly, nobody freaking knows.
They switch every day.
Yeah. Like no clue. There's no plan. There's no nothing. Like
somebody asked me if we were buying. Are you still buying with all the tariffs going on? I'm like,
yes, dude.
What more tariffs? Like, what are you talking about? Like what?
Yeah.
It's like meaning we can't even identify what that risk is. So then, when asking about it, well, the tariffs that's going to cause a recession. I'm like, okay, well, what tariffs? How? What does that mean? And all they're doing is regurgitating things they saw online, and that is becoming, or they're hearing in the news. Here's the thing is, it doesn't mean it's even wrong, but it may have nothing to do correlated with the outcome.
Right.
I buy when markets are up, I buy when they're down, I buy when they're sideways. Why? Because I know what I'm buying. It's not gambling. I'm creating opportunities and we're creating upside. We have a plan. That is what makes smart money smart. Opportunities, outside conditions make my buy box either have a lot of them or a little of them. I say this all the time. I don't predict recessions. I don't predict boom markets, but my money does. And what I mean by that is when markets aren't good, there's usually a lot less good buying opportunities. When markets are bad, there's more buying opportunities. And the reason is because I know what I'm buying. I know what those yields are, everything else. So then I end up just buying lots of deals, right? And it's not because I said, oh, the market's down, so we're going to buy. No, I don't.
Right.
I can't predict markets.
The opportunity is there.
The anchors on CNN, Fox, CNBC, they can't. In fact, they're horribly, horribly bad at that. Economists have predicted every single recession and all 90% of the recessions that never happened. It's like, it's so bad.
Yeah.
But that is the difference between the signal and the noise. You got to create this plan. You got to know what you're buying, why you're buying it. You got to know how to look at the actual risks that affect that strategy and investment, analyze and manage them. And then when everybody else is distracted by noise, you're just seeing signals and you're buying and you know what you're doing, you're executing. And then when all of a sudden all the noise changes and everything's good now, even though it was all going to end, you're sitting here with all these assets producing all this money. And then everybody will say, I wish I could go back to 2010. I wish I could go back.
Or I wish I had a crystal ball.
Yeah,
like,
exactly.
You
like,
predicted.
We didn't. Like, that's not how it works. That's how you take control, though, and that's how you break through. And I think it's systematic. Don't feel like I need to not be worried or scared, or that there's not, or that don't believe that there's not risk. No, don't do that, everybody. Do exactly what we talked about. List it out. Identify your buy before you get the opportunities, because you don't know what the opportunity will be when it comes your way if you haven't already decided that. Move forward, manage the risk, work with others, surround yourself with others, get experts to confirm and to show you where risks are, then how to mitigate them or manage them. And then your confidence will not be blind. Your confidence will be in the process and the strategy. And it won't be alone. It won't be egotistical because you think you know, or it won't be, you won't move because you think you don't know. That's not what you want to do. That's how you get stuck.
It truly is, man. And I want to outline that framework that you went through too, where the risk mitigation framework. Maybe we get to trademark this or something. But the process that you went through of saying, hey, what could happen? Okay, X, Y, and Z. Okay, what would cause X, Y, and Z to happen? Okay, perfect. What would I do to prevent X, Y, and Z from happening? Like that 3-step process. Absolutely beautiful. Do it.
Easy to do. Work it. And two, by the way, if you're like, well, I don't know how, that's why we get experts. That's fine.
Exactly.
Once again, you don't need to know. But if you know the causation and what's happening, then you can go fix it and mitigate it. Get other people.
Just ask.
Exactly.
Yep. No, good stuff, man.
All right. I hope that helps everybody. I know it's something that maybe not all our listeners are dealing with, but a large percentage of our listeners, because of the feedback, we are. So I hope this was helpful for you. If it was, guys, share it on YouTube. Throw in the comments what's holding you back, why you feel stuck. And for those that have kind of broken out and been going, help others. Tell others in the comments. Here was something that I did on a daily basis. What are you doing now that helps you cut through everything and be action-oriented, results-driven, regardless of circumstance? Let us know. Thanks, everybody.
Thanks, guys.